And here are the crypto top headlines. First up, Disney launches NFT platform with Dapper Labs. Next, 48,000 is now reasonable BTC price target. Also, IRS rule redefining broker sparks privacy and operational concerns in DeFi. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Disney launches NFT platform with Dapper Labs. The NFT platform, dubbed Disney Pinnacle, will go live later this year. Disney has created a non-fungible token, or NFT, platform together with blockchain and Metaverse firm Dapper Labs. According to the November 14th announcement, Disney will tokenize its iconic cartoon characters from the past century onto its NFT marketplace, dubbed Disney Pinnacle. The platform will also include icons from Pixar as well as heroes and villains from the Star Wars galaxy, uniquely styled as collectible and tradable digital pins. Fans anywhere will be able to collect dynamic pins on their phone and trade instantly and securely with each other no matter where they are in the world, Dapper Labs CEO Roham Garagazlu explained. The NFT platform will launch later this year on the Apple App Store for iOS and the Google Play Store for Android and on the web. Currently, only a waitlist and a landing site exist on its official page. Disney Pinnacle is built on Layer 1 blockchain Flow, which Dapper Labs also created. Previously, Ticketmaster elected to mint NFT event tickets on the Flow blockchain. Earlier this year, Disney pulled the plug on its Metaverse division as part of a broader restructuring plan to cut its operating expenses by $5.5 billion and lay off 7,000 staff over 2 months. The Metaverse division's 50 or so members were left without a new employment contract. Founded in Vancouver, Canada in 2018, Dapper Labs received a $15 million investment from Hong Kong Web3 creator Amico Brands. In July 2023, Dapper Labs announced its third round of staff layoffs year to date. The firm is known for its NFT brands such as CryptoKitties and NBA Top Shot. Our next top headline, $48,000 is now reasonable BTC price target, says Decent Traders Philb. Bitcoin is bouncing back, and despite the risk of a pre-halving dip, BTC price action is on track for upside, Philb says. Bitcoin remains on track to near $50,000 around next year's block subsidy halving event, longtime analyst Philb says. In his latest interview with Cointelegraph, the co-founder of trading suite Decent Trader shares his thoughts on BTC price action. Philb says, Bitcoin has given strong indicator of bear market breakout. Bitcoin has well and truly cemented its exit from a sub-$30,000 trading range, which characterized the market for much of 2023, Philb believes. Having overcome a multitude of resistance levels, the question for Bitcoin bulls now is how price action will turn out into the halving. Due in April 2024, less than 5 months remain until the event, and Philb argues that a reasonable bullish target could lie at just below the $50,000 mark. This echoes assumptions from his previous interview in early September when BTC to USD traded at just below $26,000. That said, a drawdown could easily come first, testing the morale of those who might already be used to the BTC price upside. Continue reading to discover what the coming months could have in store for Bitcoin from a technical price perspective. Cointelegraph, or CT, asks, do you think that BTC has definitely broken out of its previous range below $30,000? How would you gauge the strength of the various moving averages that previously acted as resistance? Philb, or FF, said, the 20, 50, 100, and 200 week simple moving averages are all around $30,000 at the moment. They also lie toward the top of the trading range, below $30,000 and above $25,000, in which Bitcoin spent 200 days or so. The two combined would suggest that there will be buying interest below and together are a strong indicator of a breakout and trend change from the 2-year bear market. CT asks, what's your timeline for a Bitcoin ETF approval, and what do you think the event would do to the price? FF said, my view on the ETF remains the same, which is that it will continue to be delayed as long as possible, but a spot ETF is inevitable. The major players are not wasting their time, and so it continues to be a matter of when. Given their position on market manipulation, I wouldn't be surprised to see the approval intentionally come from left field. CT asks, where would you now draw the point of control on the BTC price chart? What resistance and support or RS levels are you watching? FF said, this really depends on the time frame. The last couple of years suggest 26,000 is an important point of control. Over the last 6 months, it would suggest closer to 27,000. There is resistance around 38,000 to 41,000. A lot of volume was traded there before many of the implosions we saw among crypto entities. Some people will exit and others will consider redeploying capital under a new environment. This is a clear area of contention. CT asks, in our last interview, you were eyeing a BTC price boost as part of pre-halving action in Q4. Has that perspective changed much since? Some are concerned that Q1 2024 might have the opposite effect. FF says, I think it is fair to say that we have seen that price appreciation in Q4. The cyclical model implies that Q1 2024 could pull back before another run into the halving. A 61.8% Fibonacci retracement of the bear market, 46,000 to 48,000, would be a reasonable technical target assumption from a bullish perspective in my opinion. Our next top headline, IRS rule redefining broker sparks privacy and operational concerns in DeFi. The U.S. Treasury and IRS have suggested changing the definition of broker in federal tax laws, sparking concerns amidst the decentralized finance or DeFi community. The Blockchain Association, a prominent crypto lobbying group, has expressed strong opposition to this proposal, arguing that it could severely impact the DeFi industry in the United States. In a detailed 33-page comment submitted to the IRS, the Blockchain Association outlined the potential ramifications of this redefinition. The change, first proposed in late August, seeks to broaden the broker definition to encompass not just centralized crypto exchanges in the U.S., but also any crypto project that directly or indirectly aids in transferring digital assets. This broadened scope would encompass many DeFi protocols, subjecting them to the same reporting requirements as traditional bond and stock brokers. Specifically, the proposed rule would extend to various parties involved in the digital asset ecosystem. This includes entities offering access to DeFi protocols, automated market maker systems, and services that help discover the best buy and sell prices. Additionally, it would cover providers of self-custodial wallets, with swap functions that enable access to decentralized blockchain trading platforms and potentially even internet access services, including web browsers and internet service providers. Marissa Tashman Koppel, Senior Counsel at the Blockchain Association, stressed the significant impact of the proposed IRS rule, stating it would drive U.S.-based decentralized projects abroad or out of existence. The association's argument centers on DeFi's goal to establish trustless systems with limited control over users' financial data. The association also raised concerns about privacy, noting that linking wallet addresses to personal identities would expose users' transaction histories, akin to publishing a lifetime of credit card transactions online. The IRS's proposed rule has been open for public comment for 74 days, attracting over 124,000 comments. A public hearing was held earlier today, where IRS regulators engaged in a dialogue that suggested a serious consideration of the concerns raised about decentralized tech, NFTs, and stablecoins. Koppel, who spoke at the hearing, expressed cautious optimism about the outcome. Amid this backdrop, the IRS is exploring the implementation of a free software service for taxpayers, similar to the Direct File pilot program. This initiative could leverage public blockchain data to assist taxpayers with DeFi-related tax reporting, thereby alleviating the need for DeFi protocols to collect personal user data for IRS reporting. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.